Cloudflare has recently hit a new all-time high, increasing my personal return in the company to 100%. But with a rapid rise in the stock price come some important questions. Is the company still worth investing in? Am I too late? And what will happen to the stock price after they report earnings in the first week of August? Well, luckily, those are all kinds of questions that I talk about on this channel. Hey everyone, and welcome to FinTech. And in this video, I'm going to be talking about Cloudflare as a company, giving my best estimate for their earnings at the beginning of August, and talk about what this could mean for their stock price after earnings. Lastly, I'll let you know if I personally am making any trades in the company before they report earnings on August 5th. Today, Cloudflare is growing their revenue at 51% year over year. And with that rock solid growth, they have increased their stock price 3 times over the past year. So to understand where they are currently headed, we first need to understand how they got to where they are today. So hit the like button if you want, and let's start with a brief overview of Cloudflare as a company. Cloudflare's roots date back to a Harvard business plan competition where 2 students came up with a business idea called Project WeBull. Matthew Prince, who is still the current CEO of the company, was a genius computer science undergrad turned lawyer at the University of Chicago, who later went on to co-found Cloudflare at Harvard. His co-founder, Michelle Zatlyn, was a graduate of Canada's prestigious McGill University, who met Prince at Harvard Business School. Their last co-founder was a man named Lee Holloway, a technical architecture wizard who helped build Cloudflare's first product. Lee Holloway was actually the chief software architect at Prince's previous company, Unspam Technologies, before leaving to co-found Cloudflare with Prince. Prince and Michelle teamed up at Harvard for the business plan competition, and their idea actually ended up winning the entire contest. So after winning, they took their idea and moved out west to join Holloway in building the plan into a real company. Cloudflare started as a firewall for the web, and they have always stuck to their roots, putting security at the center of everything they do. They wanted to build a better way of protecting websites, visualizing themselves like an internet-wide immune system. The same way an immune system can be trained to recognize threats versus harmless cells, their products could learn to recognize who are good actors and who are bad actors. This could let them stop bad actors from affecting website performance while actually optimizing the experience for good actors. Their initial focus on blocking bad actors led to their first few products, with preventing DDoS attacks, or distributed denial of service attacks. The goal of these attacks is to take a huge number of machines and push all that traffic onto one website at the same time, effectively crashing the site. Cloudflare gained some attention back in 2013 when they mitigated the then largest DDoS attack ever against a company called Spamhaus. But Cloudflare has realized that they can also use their knowledge to optimize the web experience for good actors, making the web more responsive, more stable, and more performant. Just this week, they demonstrated the ability of Cloudflare Radar to track traffic around the Euro 2020 final in England and Italy. They later moved beyond just providing security products like firewall and access management to performance products like intelligent routing and reliability products like vendor-neutral load balancing. Today, Cloudflare is really focused on anything that makes the internet itself work better. Remember, the internet is built on essentially outdated technology from the 1980s. Back when people had no idea it would be used for website video hosting or performing cloud computing or hosting websites larger than entire countries. Cloudflare helps fill in the technology gap with their whole suite of products, which I counted at 36 products on their homepage, each of which can integrate easily with their existing customers. This incredible pace of innovation is partly why Cloudflare continues to grow so quickly. And their numbers from their last several quarters support this story, with the company growing 48%, then 54%, then 50%, then 51% year over year in their last 4 quarters. And while this kind of consistent growth is impressive, what's even more impressive is that they can maintain that growth while keeping their non-GAAP gross margins above 77% for the last 5 quarters. And that's not to mention their dollar-based net expansion rate increasing for the last 4 quarters straight. This means that for every $1 a customer spends this year, they can expect them to spend $1.23 next year. This is a good sign that customers love Cloudflare's products, since once they start using them, they use more and more of them every single year. But as impressive as these numbers are, the most important thing for us right now is to understand how the company will report they are performing in their upcoming earnings on August 5th. Now, because earnings reports always lag behind the actual quarter, these earnings will represent Cloudflare's actual company performance in the quarter ending June 2021. So first, just to give us a ballpark of what they might report, Let's first look at the company's own forecast for Q2 2021. Cloudflare estimates revenue of $145.5 million to $146.5 million next quarter, which would put their growth rate at 5% quarter over quarter, a decline in the growth rate that they saw their most recent quarter at around 10%. They estimate their full year 2021 revenue to be between $612 and $616 million, which would put them up between around 42 to 43% year over year, again representing a pretty major decrease in their overall growth rate. So if this guidance were to be believed, things would not look great for Cloudflare. But company forecasts are not always reliable, so let's look at some other ways of predicting their next quarter results. Looking at analyst estimates, the average revenue estimate for the quarter is $146.06 million, pretty much exactly what Cloudflare forecast. Now, I don't know about you, but when I first read that number, I assumed I was reading the chart wrong, because no one who actually follows this company would put their estimate equal to Cloudflare's forecast. Cloudflare beats their guidance literally every quarter. For example, in this past quarter, they estimated that they would only grow 4% in Q1, putting their revenue at $130 million for the quarter. But as we just saw, they actually grew 10% this quarter, with revenue of $138 million. 2 quarters ago, they also estimated they would only grow 37% for this fiscal year, while in this past quarter, they raised that guidance to 42 to 43% growth for the year. Cloudflare guidance is known to be very conservative, so simply using this as an estimate for how they will actually perform is extremely flawed. So what do I think they will actually report this quarter? Well, I think that they will maintain their current growth rate, likely bringing in revenue of around $152 million in Q2, putting their quarterly growth rate at 10% for the quarter. And I'll go one step further. I think they will again estimate their growth rate at 5% for Q3 and beat that too a few months from now. As long as the company continues to issue guidance for quarterly growth in the 4 to 6% range, I am confident they will beat that guidance by a few percent with each earnings report. I then expect their total yearly growth rate to be in the 49 to 51% range. So assuming they do beat their guidance and the analyst estimates just like I laid out, what will that mean for the company's stock price? Well, I already laid out how Cloudflare generally lowballs their guidance, so I don't think beating that will make the stock price increase. If anything, meeting guidance would drop the stock's value. What's more interesting to me are the analyst estimates. Analyst estimates are supposed to represent best guesses by informed analysts on what the company will actually report, independent of the company's own guidance. So in a perfect world, analyst estimates would perfectly represent market expectations for the stock. And so any beat in analyst estimates would cause a stock to rise, while failing to beat estimates would cause the stock to drop. In reality, the market can be a lot more messy. While Cloudflare has had a consistent rating of D or F from analysts like Zacks or my own Charles Schwab portfolio, it has nearly doubled since I first bought it. Something about this company has caused a huge disconnect between analyst expectations and its actual performance. And so at this point, the market does not really respect their estimates anymore. So while Cloudflare will likely beat analyst estimates, that alone will not cause the stock price to rise. So here's what to watch for with earnings and what I think will happen to the stock in a few different scenarios. Scenario 1, Cloudflare beats estimates by the amount that I outlined above. Nothing happens to the stock price because the earnings pretty much match exactly what the market was actually expecting. Scenario 2, Cloudflare matches analyst estimates. Well, in this case, the stock drops quickly as many are forced to rethink their high growth thesis for investing in the stock, as their growth rate will have essentially halved in 3 months. And scenario 3, Cloudflare beats my own estimate of 10% growth quarter over quarter. The stock price rises quickly due to the perceived acceleration in their business, and depending on the company's forecast for next quarter, this may just be a temporary bump, or it may signal that the company is actually picking up speed in their growth, causing the stock's valuation to permanently increase, or at least as long as they maintain the higher growth rate. The one other issue I want to address with the stock is insider selling. Whenever leadership in a public company sells shares in the company, they have to report that trade, which is great for us because we want leaders who are confident in their company outperforming other potential investments for their money. Well, just last month, there were a few reports of insider selling within Cloudflare. The CFO sold $4.8 million in shares, and Patrick Karen sold 100% of his shares for $9.8 million. And there has not been any recent insider buying to offset that selling. So in general, this seems like it would be a bad thing, but it's important not just to fall for the clickbait headline and to look a little bit below the surface. The stock has increased by 4.5 times since first going public, so I'd be willing to bet that the majority of the company's leadership has made most of their wealth off of Cloudflare. Because of that, it wouldn't make sense for them to buy a few shares here or there because it wouldn't move the needle on the size of their overall investment. Secondly, insiders currently own 22% of the company, worth a little over $7 billion. With this type of insider ownership, you can bet that leadership is motivated to keep the company performing because they have way more to lose than you or me. I personally do not think that there's too much to be read into these insider trails. Patrick was clearly taking his full profit out of the company, and his net worth is reportedly $145 million. So this isn't even that big of an investment for him. And the CFO may have just needed more money to buy another yacht or something. In my opinion, leadership's incentive is still to grow the company despite a few recent sales. But that's all just my opinion, and we'll see if I turn out right after they report earnings. I am not currently making any trades in or out of Cloudflare at this time. But let me know in the comments what you think is going to happen on August 5th. Don't forget to like and subscribe, and I'll see you next time.